This podcast is solely for the attention of institutional, professional, qualified, or sophisticated investors and distributors.
Hi everyone, this week we are going to talk about the prices of fossil fuels, which has been a hot topic lately, and in particular we will discuss whether they are too low or too high. This is really a hot topic since October of this year, in 2021, the price of natural gas reached an all-time high in some parts of the world, in Europe or in Asia, and as the price of coal has also increased significantly. There are many reasons for this. We could mention, for example, the weakness of the wind this year in several regions of the world, which penalizes the production of electricity from wind power and increases the demand of electricity generation through natural gas. We can also mention climate disasters, which frequently disrupt coal extraction, or a diplomatic battle between Europe and Russia over the accreditation of the Nord Stream 2 pipeline. There is therefore a sharp rise in the market prices of fossil fuels, which is linked to more or less transitory phenomena. And this is very likely that this will have negative consequences on economic growth. And we could therefore say here that the prices of fossil fuels are too high. But this is just one point of view here, and it is possible to see the problem quite differently. Indeed, the IMF economists have just published a study on the right price of fossil fuels, which goes much deeper than the recent economic developments, and which concludes that the prices are, on the contrary, much too low. Already last year, in its World Economic Outlook, the IMF indicated fossil fuels are now massively underpriced, reflecting undercharging for production and environmental costs, including for air pollution and global warming. Indeed, the IMF economists consider, but they are not the only ones, that the right price of fossil fuels would be a socially efficient price, which would reflect the real cost of their use. That is to say, a price that would not only take into account the cost of labor, of capital, of extraction of commodities and of their distribution, but a price that would also take into account the environmental cost and the cost of other negative externalities. So it may sound a bit abstract, but the IMF researchers have been working for around 10 years on a methodology for quantifying the socially efficient price of different fossil fuels in the different countries. If we take, for example, the environmental costs associated with the consumption of fossil fuels and which do not appear in the price of fuels, it is possible to associate a financial cost with air pollution and greenhouse gases emissions. And it is also possible to associate a financial cost with the other negative externalities linked to the use of fuels, such as traffic jams, road accidents, and wear and tear on infrastructure. And having worked on 191 countries, IMF economists conclude that fossil fuel prices were almost not at all taking into account environmental costs and other negative externalities in 2020, and this was particularly marked in the case of coal. For them, for the IMF economists, the difference between the market prices and the socially efficient prices constitute a form of subsidies for the use of fossil fuels, and they estimate that this subsidy was $5.9 trillion globally in 2020, or around 6.8% of global GDP. And note that these subsidies are in very large part implicit. According to their estimates, the end of these subsidies, that is to say the establishment of a socially efficient price for fossil fuels by 2025, would have multiple advantages. This would lead to a reduction in carbon emissions of 36%. It would decrease the number of premature deaths linked to air pollution by 900,000 per year. And this would greatly increase the tax revenues of states, which could be used for redistribution purposes. In short, are fossil fuel prices too high or too low? It really depends on how you look at the problem, but it's a safe bet to say that this will be one of the major topics in the next few years if there is a real political will to start the energy transition. Thank you, and talk to you next week.
All comments and analysis reflect CPR AM views on market conditions and its evolution, according to information known at the time. As a result of the simplified nature of the information contained in this document, that information is necessarily partial and incomplete.